Welcome back to the Traders Improve podcast, and today I want to talk about time frames, and I want to discuss the question of what the right and the best time frame out there is. And this is probably the question that I get asked more than any other trading related question. So I'm looking forward to explore this topic and share my ideas. And the question for the right or the optimal or the perfect time frame is a very important question in trading, because switching time frames and going to another time frame pretty much changes everything in your trading. When you go up or down time frames, it changes how much time you need to invest on a daily basis. It also will determine when and how you have to do your chart preparation. Also, how many trades you can expect on a daily or a weekly basis is determined by the time frame choice. Also, how many trading opportunities you will get, how long you will hold your trades, and how long you will generally be in trades. And also, time frames determine the different risk factors that you are exposed to in your trading, such as weekend holding and overnight holding, which is a big factor when you trade the higher time frames. But also news exposure. Do you have to hold through news events, or can you, as a day trader or as a scalper, for example, trade around news events and avoid news events, and many other factors. Before we continue with the video, I want to show you my new trading program. I call it the Tracademy. And this is the ultimate all-in-one trading education program. What you will find here is a completely new trading course. I've recorded over 80 videos with brand new trading content. The videos in this trading course have never been shared anywhere else before, and I go way deeper than in all of my YouTube videos. Also, you get mentored directly by me. I'm not using other teachers, I'm not using other coaches. I'm the one that you're always interacting with. There are live webinars taking place almost every week, and there's also a private community with other traders from all around the world, and also me. I'm interacting with all of my traders in the Tracademy directly and personally. So you join the new video course, you get personally mentored by me, you have new trading strategies. They are completely brand new strategies. I've never shared the videos before. They are for swing trading, day trading, and for all the time frames. There's a great and supportive community. It works for Forex, commodities, cryptos, and also indices. Everything that I've learned mentoring traders for the last 8 years and having been trading myself for over 15 years is included in this course. There's also a certification program. So after you've gone through the course and you have learned the material, there are 60 trading questions waiting for you where you can prove your knowledge and then at the end get certified. So if you're interested, make sure to check the video link in the description below. If you have any questions, leave a comment. And if you decide to enroll, I look forward to welcoming you in the Tracademy. And when traders ask me what the right time frame is, there's another question that swings with it, that comes with it. And the question that many traders unknowingly or subconsciously ask is there a specific time frame where my strategy works best or not at all on? And I think this is the question that many traders also have when it comes to the time frame question. So in this podcast, I want to do a two-part. First, we're going to talk now about, is there a specific time frame where a strategy works better or worse on? And then in the second part of this podcast, I want to talk about what the right time frame for you is. So let's take the first question first, the strategy question. And in my experience, and I've been trading for well over 15 years, and I've been mentoring traders for maybe 7 to 8 years. And what I've seen is that you can take pretty much any trading strategy and apply it to any time frame. This is absolutely true. The core of a trading strategy can be applied to any time frame. Whether you want to trade the general chart patterns, whether you want to trade breakouts, you trade pullbacks, retests, you want to trade supply and demand concepts, smart money concepts, or whatever trading strategy you want to follow, you can use any time frame because the signals occur on all the different time frames. But how a specific trading strategy will play out in any given time frame will differ slightly. Of course, you will see supply and demand levels on a daily time frame, just as you will see them on the 1 minute. You will see support and resistance level on the 5 minute and also on the daily time frame. You will see a smart money concept, signals and patterns on the 1 minute, on the 30 seconds, but also on the 1 hour, the 4 hour, the daily, or the weekly. However, how those setups will manifest will differ slightly, and sometimes more, obviously, if you compare the 1 hour or the 1 minute to the daily chart. The changes and the differences will be a little bit bigger, obviously. How volatility plays out on the 1 minute is obviously very different than on the daily chart. Also, how trends will play out is going to be very different on the 1 minute, 15 minute, 1 hour, and the daily. The signal duration, how long is a signal going to last, also changes. And also the noise that the different time frames will generate also is very different. However, the signals themselves, they will always be present on whatever time frame you choose. You can pull up the 1 minute time frame and you will find great smart money concept signals. You will find great patterns, and you will find those exact same patterns on the 1 hour, the 4 hour, and the daily. I have done videos in the past where I have hidden the time frame, and there's no way of telling most of the time what time frame the pattern is on, because the 1 minute will just look as the 4 hour. And this is a very, very important realization, because it means that you can trade any trading strategy on any time frame. However, obviously you have to make slight adjustments to how you place your stop loss, how you place your target, how you place and manage your trades, and so on. So this is, I think, a really, really important realization, because you may find a specific trading approach very interesting and it appeals to you, it makes a lot of sense to you. For example, you want to try supply and demand trading, and you are not sure about whether it will work on the 1 hour the same way it will work on the daily or the 15 minute. And understanding that you can choose pretty much any trading strategy and apply it to any time frame is really, really important, because it can put your mind at ease and it can also remove a lot of doubts. What I would also recommend in this context is to backtest the specific strategy. For example, you want to trade a specific supply and demand strategy, and you have your rules. And what I would recommend to understand the components and to the manifestation of the setups and the price action, do it on a backtest. If you want to trade the 1 minute, great, do that. Test the last 3, 4, 5, 6 months on a 1 minute time frame and look for the setups. Then maybe after you have done that, after you have a good sample size, test the same setup on the 1 hour or the 4 hour or the daily, and see and compare how the setups will differ. What you will most likely see is that the setups in general will often, not always, will often look very, very similar. Just how the price will move is going to be slightly different. And this is such an important step on improving and developing your trading strategy. What I think is a huge problem for many traders is that they are a little bit lazy in their approach. They are looking for a system, maybe they buy a course, maybe they follow someone on social media, and they get maybe 3, 4, 5 rules and a few criteria, and they want to avoid thinking, they want to avoid putting in the work and going through the backtest, which is effort, which will take time, which is not going to be easy in the beginning. But traders believe that they just need to be given some magic set of rules and then they apply it without thinking. But this is absolutely not how trading works. You have to get to know your trading strategy, you have to spend time with it, you have to backtest it, you have to collect statistics and results about your backtest, you have to understand how the different setups will play out, what happens before a good setup, what happens before a setup that often doesn't work out, what are the differences between a setup that works out and that doesn't work out, what happens after your entry, what happens during the trade duration, how deep's a pullback, how often will the price pull back, what is the normal pullback, and what is a pullback that is not normal and that should lead to you closing the trading position. Those are things that you cannot buy. You cannot buy a course and then those questions will be removed. Obviously, in a good video course, you will be exposed to many different trade ideas and trade studies and chart studies. But for you to fully internalize and accept and understand and gain the experience, you need to put in the time. So the first question of what is the right time frame is, or what is the right time frame for your strategy, is a little bit irrelevant, because you can choose the trading strategy that you want to trade, whatever it is, it doesn't matter. And you can go to a time frame that you are interested in. And in a moment we come to the second part. What is the best time frame for you? But the first part is that, and the first important takeaway here is that the time frame question for a strategy is not as important as many traders believe. You don't have, for example, a supply and demand strategy and it will only work on the 5 minute, or it will only work on the 1 hour, and then it won't work on any other time frame. This is absolutely not true. In general, what I've seen in, I would say, maybe 95% of all the trading strategies that I've traded and that I've talked about or talked with other traders about, they can be applied to different time frames. And this is such an important realization, because a lot of traders, what are they? Maybe fearful, you could say that. They lack confidence. They're worried that they will choose a wrong time frame. And this is absolutely not the case. So this is something that is really important. And now to get to the second part, what is the best time frame? And I want to rephrase it, because I want to rephrase it to the question, what is the best time frame for you? Because I can tell you what my preferred time frame is, but I have mentored hundreds of traders, and many other traders have traded my exact trading strategy, but they have chosen a different time frame. Maybe I like the 1 hour more, maybe I like the 4 hour more, but it is not a time frame that makes any sense to you. It is not in line with your strength, it's not in line with your weaknesses, it just is not compatible with your lifestyle as well. And those traders, if they would have taken the strategy and applied it and tried to copy me by going to the same time frame, it would have ended in a disaster. But the best traders that I have mentored, and the traders with the best results, they're often taking my strategy, made slight adjustments, and then applied it to their perfect time frame. So this is really important, and therefore you cannot just copy what other traders are doing, and what might be the right time frame for one trader might be a completely wrong choice for the next. You can of course copy a trading strategy, but when choosing the time frame, you have to adjust it to your personal needs. And to find out what the best time frame for you is, I have some probing questions for you that will help you understand where you belong in this time frame choice question. For example, you can ask yourself, how many trades do you want to take? This may sound like a weird question, but it's an important one. Some traders always feel the need to trade. I've mentored traders who, if they don't get a trade every single day, they will feel very uneasy. They'll get impatient and they feel that they're doing something wrong. And then they're often likely to just jump into random trades. So if you're a trader who feels that you need to trade every single week, that's a very important realization, because it can mean that you need to trade on the lower time frames. You maybe the daily time frame and the 4 hour are not the right choice for you. Maybe going for the 1 hour, the 15-minute, and exposing yourself maybe to more Forex pairs than just 1 or 2 is also important here. That's a really important question. Second question that you can ask yourself, are you okay with patiently waiting for trades, or do you suffer from FOMO? Some traders are very patient. Other traders are very impatient and they jump into the markets. And this is really important. The lower time frames will help you generate often more trading opportunities. The higher time frames will obviously take much longer for the trades to show up. Another important question here, can you stay in trades for a long time, or do you often mismanage your trades when you have to hold them for a long time? I have seen many traders be on a higher time frame, and when you are in a trade for maybe 2, 3, 4, 5 days, maybe even a week, there is a lot of potential for traders to mess it up and to mess around with their trades. You see your P&L go up and down, the price is moving back and forth, you have pullbacks, and if you are not emotionally stable and if you always feel the need to fiddle with your trade, then the higher time frames with a long holding time might not be the best option. Of course, you could also have other coping mechanisms, for example, reducing your screen time, not looking at your broker P&L all the time, and trying to combat the urge for fiddling with your trades that way. But the time frame choice also obviously has a big impact on trade management. Another question, Do you prefer to close your trades before the weekend, or are you okay with holding trades over the weekend? And whereas traders on the 4-hour and the daily time frame certainly have to hold trades over the weekend often, if you're a day trader, often you can just have a trading rule that you're going to close your trade at the end of the day, and you don't have any open trades over the weekend. And some traders, they cannot accept it mentally. They feel always scared and worried about having trades open over the weekend. If you are one of those traders, and if you don't like having trades open over the weekend or overnight, then being a swing trader on the higher time frame is absolutely the wrong choice for you, and you should go to try the lower time frames. That's really, really important. Also, the risk exposure. If you are a swing trader, you have to hold often through news events very often. So you can see those questions help you understand, do you lean more towards higher time frames, or do you lean more towards lower time frames? And it's a very good starting point on trying to figure out where do you belong. And now it comes down to experimenting with your time frame and evaluating for yourself how it feels. Obviously, what happens is normally what I've seen when I work with traders is that they choose a time frame, then they stay on it for maybe a few weeks, maybe a few months. They collect some sample size, they trade it, and they have a good feeling afterwards how it feels. And for example, let's assume they start maybe with a 15-minute in the beginning, and you follow the 15-minute time frame for maybe 3 to 5 months. And then you can ask yourself, did you get enough trades? Do you feel overwhelmed by the number of trades? That's also a point that you will sometimes have on the lower time frame when you get too many opportunities. Can you handle the trade management, or are the lower time frames too fast for you and you cannot handle the trades in the best possible way? And after you have done that for a few weeks, what I would recommend in the beginning, change your time frame. Go from the 15-minute maybe to the 1 hour, maybe to the 2 hour, maybe even all the way up to the 4 hour, and see and compare how those feel. Does it feel better? Does it feel worse? And don't make a judgment call too quickly. If you've been trading the 15-minute for a few months, also spend a few months on the 1 hour or the 4 hour. Don't, because the switch from the 15 to the 4 hour is going to be a huge one. In the beginning, it will feel very different, and probably you will need some time to adjust. So don't make the decision too quickly. I've said it in a past podcast. Don't rush your development. In the beginning of your trading journey, it's really about trying to get a feel for this trading thing. It's probably all going to be very new, and you want to explore as many opportunities, and you want to explore as many paths as you can in the beginning before you settle for a specific strategy. You want to be very curious in the beginning. You want to be open. You want to explore and try out as many new things as you want, so that after maybe a year, maybe after 2 years, you have a very good understanding of what is out there, and then you can make a much better decision. So I hope this podcast helped you shed the light on the time frame question. Also, as we've discussed in the first part, the time frame specific question regarding strategies is something that is, I think, very important to also acknowledge and to understand and to just try it out. And first and foremost, also to gain experience through putting in the time and really doing the back tests and really getting in the data. You don't want to rely on other people's opinions. You don't want to just copy what other traders are telling you to do. You really want to do the work for yourself. You want to put in the time yourself and make your own experiences to then make the right decision for you. Because in trading, it is never black or white. There's a lot of gray areas, and what works for one trader may not work for the next trader in the exact same way.